Welcome to Late Night Stocks. Today I will analyze two US chip makers, Nvidia and Micron Technology. Should you buy Nvidia or Micron stock in 2021? Are they overvalued? Will they keep bringing these profits after chip shortages? I will answer all these questions, giving entry points for both stocks. Let's start with Nvidia stock. The company was founded in 1993. They made an IPO on Nasdaq in 1999. Since then, they made 5 stock splits. One of them was recent. I will come there in a minute. After reaching $1 billion sales with the Xbox success, Nvidia stock was included in S&P 500 in 2001. Since then, they are an S&P 500 company for 20 years. When we look at their last 5 years revenue, they have steady growth, reaching $17 billion revenue. After the start of pandemic with high demand for computers, gaming and data centers, their business is flying to the moon. The question is, will they keep growing like this? As you see in the previous slide, they have 4 main businesses. In the gaming part, they are manufacturing graphic cards where there is a high demand with the gaming laptops, esports and virtual reality. Gaming business growth is 47% year over year, which is very impressive. Another high growth business, data centers, grew 40% year over year. Nvidia is the industry leader, bringing high-tech solutions for cloud services, demanding high computational power. Automotive and professional visualization business is a small part of their revenue, bringing 3 to 6% growth. Maybe with autonomous driving, we may see higher growth numbers. So data centers and gaming business are a core part of the Nvidia. With the customers like Amazon Web Services, Alibaba and other cloud providers, Nvidia grew their revenue 82% average in the last 5 years. With the exponential increase of Nvidia developers providing a high competitive performance in supercomputers, the data center business promises still big growth ahead. Nvidia provides best-in-class solutions when it comes to graphic cards. High-growth mobile, desktop or console game sectors bring Nvidia always new customers. Nvidia doesn't stop here but tries to make one step ahead to disrupt game consoles like Sony's PlayStation. They entered the game streaming business last year with the platform called GeForce Now, and they reached 10 million users as of April. But what is game streaming? If you have a good internet connection with any computer, you can connect GeForce Now servers and play games with high-end graphics. Of course, Nvidia is not alone in this business. There are competitors like Google's Stadia and Amazon's Luna. I wondered and checked some comparison videos of those game streaming services, and at the end I make these conclusions. Google Stadia and Amazon Luna have limited libraries. You can play only single-player games there. Amazon Luna has only desktop version, and they didn't start to boost the advertisement yet. I think Amazon will boost Luna after taking care of these missing points. GeForce Now looks like the best option due to general gaming performance and multiplayer gaming options. In addition to that, it is easily connected to Steam and Epic Games. So let's say your computer is not good enough to play games like Control and Watch Dogs. With GeForce Now you can play these games even on your smartphone. I think it's a game-changer technology. You don't have to carry these heavy gamer laptops. You can play these games anywhere with any laptop. With this technology, you don't have to worry about your computer's graphic card, if they will work with the new games and so on. You just pay this monthly fee, then you can enjoy any game. As you see, they have $5 to $10 per month membership options. I need to mention that they're not sponsoring this video. I'm impressed, so I wanted to share it with you. When you look at the big picture, our stock checklist, with these game streaming services, Nvidia is building a recurring revenue model. They have a good balance sheet with the high cash and low debt, which is key for the company. In total, they have $20 billion cash and $13 billion debt, so it is good. They are the industry leader and the company is able to double GPU computing performance every year, which is very impressive in my opinion. They somehow beat Moore's law. They are disruptive with their technology and they are addressing growing sectors like gaming, cloud business, AI and Internet of Things. Everything so far was all positive, but evaluation of the company is concerning. They are now at $218 stock price with a $550 billion market cap, so it cannot easily double and reach $118 market cap. As you see in this table, Nvidia has the highest PE ratio compared to other semiconductor makers. Although it is expected that Texas Instruments will bring similar growth as Nvidia, Nvidia has 3 times market cap Texas Instruments. In this table, it is less riskier when it is green. which means a lower price to earnings ratio. For example, Micron Technology has significantly low price to sales ratio compared to others. I will come to Micron stock analysis in a minute. By the way, if you want to have access to similar tables like this for other industries like vegan food, e-commerce and automotive, you can support us via Patreon to get the stock analysis cheat sheet with 50% early bird discount. In addition to that, we have another option with the late night stocks portfolio access, including stock analysis cheat sheet, where you can track stock transactions of the portfolio and check the performance against S&P 500. You should give it a try with these early bird discounts. In case you don't like it, you can cancel anytime. Let's continue with the Nvidia stock entry points. You can argue that industry leaders and disruptives like Tesla can have higher PE ratios. I will approach this stock price now technically. Let's check if there are any decent entry points. Nvidia stock is overvalued, and one of the reasons is stock split. As you see on the graph, they announced the stock split on the 21st of May, and stock price reached $200, 50% in couple of months. After reaching all-time high at $230, we made a 15% correction and now we are at $218. I wouldn't buy from here. As you notice, Nvidia stock likes to touch these 200 days moving average, the red line, once in a while. I would wait for that. If we have some sell-off and get back to $170–180 level, I would consider that as an opportunity. Q3 earnings season is started, and Nvidia will announce Q3 earnings on the 17th of November, 2 p.m. Pacific time. Save the date. The company already provided guidance for these earnings with $6.8 billion revenue and 65.2% gross profit. Let me know in the comments what is your price target for Nvidia. Let's continue with a low PE ratio chipmaker, Micron Technology. Micron Technology is at $67 and it has been dropping for 6 months after hitting $95. Can we go back to these levels, or is it game over for Micron Technology? The company beat the estimates again. They had $2.42 earnings per share versus estimates $2.33. 4 in a row earnings beat. Impressive. In this quarter, they made $8.3 billion revenue and $2.7 billion net profit. In the last earnings call, CEO of the Micron Technology mentioned that due to chip shortage of other components, the demand for RAM products can lower in the next quarter. This is why Micron stock price continued dropping although they beat estimates. I think it will be a temporary drop and demand will stay high in 2022. They recently announced a new product, Micron 7400 SSD, with industry-leading form factor and flexibility. It will be a good solution for demanding data center workloads, helping transition to next-generation servers architectures. Despite of these positive news, the stock price keeps dropping. The question is, until when? When I checked the previous bearish rallies of Micron, I saw an interesting pattern in 2018. RAM business is a cyclic business, and we can see these cycles in the stock prices as well. In 2018, Micron stock had 7-month bearish period where stock dropped 50%. Are we in a similar bearish trend now again? It has already been 6 months since the recent high. 7 months corresponds to mid of November. Around this time period can be the dip. Before mentioning the entry points of Micron, I want to thank you again, this channel's supporters. If you want to support us and motivate us to keep bringing this high quality content, don't forget to like the video and buy us a coffee by clicking the link in the description. What are the entry points? After going below this 200 days average, the red line, we continue in this bearish trend. We have a resistance line coming from previous lows. In my opinion, the dip will be between $55 to $65. Of course, this is not investment advice. Please do your own research. If you want to be part of the company, you can enter around these levels, $55 to $65, or if you have Micron stock already in your portfolio, you can lower your price average. My price target for Micron stock is $150 in the long term. When I looked at stock price in general, the volatility is still high and ongoing. Although the indexes like S&P 500 and Nasdaq are up, we saw huge corrections in some stocks, especially the companies with no profit and revenues dropped even more. That is why we need to pick stocks that are profitable with good free cash flow and low debt. When I check the balance sheet of the companies, some companies have debt as much as their market cap. This is dangerous. As you see in this graph of S&P 500, S&P 500 index performing above average. The trend line coming from the previous highs can be the resistance in the next correction. When will be the next correction? We don't know. But I suggest don't try to guess the market. If you keep investing profitable companies in growing industries with good balance sheet, you will be successful in the long term. Sooner or later, companies come to valuations they deserve. You should always try to use, for example, our stock checklist so that you don't miss any points. I hope you enjoyed the video. Don't forget to click that notification bell, give a like and subscribe. See you in the next videos.